This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it's Robb Reinhold.
Hello, everybody. This is Robb from Maverick Trading, Maverick Currencies, and the Flat Earth Trading Society. You know what, Patrick? I realize I need to just start making more businesses so this intro can just go on forever. But anyway, I've been trading for over 25 years, and I'm just loving this Trading Psychology podcast.
Need to open up a new business too. Spoiler alert, I may have already done that. Anyway, moving into episode 38, and you might have seen the title, and those of you who follow my channel know that this will be a bit near and dear to my heart. As a lifetime contrarian, this is something that may or may not have affected me early on in my trading career. We'll see if it has affected any of you. So, being the token contrarian here, not sure if Robb is or not. I have a feeling he might be. But Robb is going to kind of psychoanalyze me this episode, and we're going to go back and forth. Hopefully some of these points will ring true or false with you one way or the other. And let's go ahead and get into things, Robb.
Well, thanks, Patrick. Yes, I am a contrarian. And here is the biggest irony of trading. Most people that get into trading are contrarians because we've all been told you can't make it in trading. We all know you can't do it. The only people that are going to take on that challenge is people that say, F you, don't tell me what I can and can't do. I'm going to do it anyway. So most people who do get into trading end up being contrarians by nature because most people will just say, oh, you can't do this, then if you're part of the herd, you say, great, I'll go do something else. So most people that get into trading are contrarians. What do you think about that statement, Patrick?
I believe it because, especially, I guess, back when I started, I always thought you had to go to school for it. And even something like reading a chart, you had to have a 4-year degree and you had to understand economics and do all those type of things just to trade something as relatively simple as Forex, for example. So that really kept me away for a while. I'd always wanted to do something like that, but I just didn't think it was possible due to the requirements. Once I found out it wasn't, I was like, well, why can't I do it?
Yeah, who are they to tell you what you can't do? So, look, that's been my personality, really from when I was young. And this is the Trading Psychology Podcast, and I want to get you all onto the couch and really jump into your minds. Before this episode, Patrick and I were talking, and I actually wanted to recreate that experience because I think it was perfect for what this episode is all about. So, Patrick, tell me a little bit about when you got into trading. What was your first trading strategy that you gravitated toward?
Reversals. The opposite of what I do now, interestingly enough. The reason why is, well, two reasons really. One, when I learned about price action tools and indicators, the majority of the examples they showed, not all, but the majority were reversal patterns, like something bouncing off of a resistance line, or the RSI being oversold and turning over. And so I thought that idea was really intriguing because who doesn't want to have that ego hit of calling a top or a bottom and getting paid for it? And I just saw example after example of this happening because, of course, when you learn, every example they show you works like a charm until you do it. So that's so I was determined to make that happen.
Well, thanks for sharing that. And what I said to you earlier was that when you got into trading, you were exposed to all of this information. You were exposed to all these strategies. And in your mind, you said, well, I saw reversal strategies first. That's what I was shown first. And that's why I went with it. And I said, no, it goes deeper than that. You saw lots of other stuff. But in your mind, you only saw reversals. You gravitated towards reversal trading because of who you were. And I said to you, you didn't pick reversal trading. Reversal trading picked you. You were exposed to plenty of other stuff that you saw and you said, ugh, don't like that, don't like that, don't like that. You saw reversal trading and you said, hell yeah, that's what I'm going to do. So based on who you were as a person, when you got into trading, you gravitated towards that strategy based on your personality. What do you think about that?
Hard to say. Possible because when you first learn these things, it's so euphoric. Like, oh, this is how you read a chart. One, it's a lot easier than I thought. Two, according to these examples, it's really effective, and maybe by doing this, I can get out of restaurants. That was my main concern. Why it chose me, I don't know. Yeah, it's tough. Now that you say it, it's possible, but I really wasn't thinking of that at the time. At least I don't think I was.
Well, no one is thinking about it at the time because when you start trading, you're not self-aware enough to even understand this. So based on who you were and the first exposures you got to trading, you picked a way that you were going to attack the markets based on your personality. Now, I am a contrarian. I've lived my whole life as a contrarian. All my family was told to go to college, get a degree. That's how you make it in America. And you know what? I chose not to do that. So when I got into trading, I absolutely fell in love with shorting. I fell in love with it. The ultimate contrarian. When things were going up, oh my gosh, look how dumb these people are. Look how idiotic this stock is that just went from 50 up to 80. I'm going to short it. And then when I went short and I made money, oh my gosh, the euphoria, the ego boost. There's nothing better. There's nothing better than knocking it out of the park on a reversal trade. Patrick, is there anything better in this world of trading than getting that trade right?
Yeah, as much as I don't even attempt it nowadays, I know exactly what you're saying, because when you do something like that, especially early, you're like, man, I've been doing this a grand total of 6 months, and I am already in such elite company because the entire world was going one way. I decided to go the other way, and I was right. Jesus Christ, what else am I capable of if I am on such a just a different playing field than everybody else?
You are exactly right. And that fed your ego. So let me tell you a little bit about me when I got into trading, is that I was going to do it my own way. I wasn't going to go to college. I wasn't going to work for a company. I was going to do it my own way. And when I got into trading, I learned about shorting. And for me, the idea that I was smarter than everyone else. So as this stock was going up, I was watching this stock going up thinking, these people who are bidding this stock up are the dumbest people I've ever seen. Who is buying a stock at 80 that was just at 50 a week ago? These people are idiots. And I wanted to be intellectually superior. Now, I've talked about this in other podcasts. One of my favorite stories to tell people, and I'm going to tell this story as many times as I possibly can before I die. I was arguing with my good friend Joe. Joe and I have been trading together for 23 years. And I brought him into it. I've been trading for a couple of years, and I brought Joe into it. And we were arguing about a trade. And I said to Joe, Joe, I know I'm right. I know it. And Joe looked at me just with this face like I was the dumbest person in the world. He's like, I don't care if I'm right. I just want to make some money. And I realized that trading for me, money was second. You know what was first? Intellectual superiority. My ego was more important. And when I learned that, and that just was like a gut punch, I realized, what are you doing? You're the idiot. You are the idiot. Get rid of your ego. Get rid of this intellectual superiority and be on the right side of the trade. That for me is when I stopped being a contrarian. So I love to tell that story because there was a turning point and it was hard. I had to work for the next 2 years on how to jump in with the herd. Oh my gosh, it's so hard after you're a contrarian. But I realized my ego was the thing that was making it to where I wanted to be a contrarian.
So for me, don't laugh, but it was different because you obviously cut your teeth in equities, and I started in the Forex market. And I realized right away that you're just trading one thing against another thing. So the whole idea of overbought and oversold doesn't make a whole lot of sense. And so I never saw things as like, well, this is ran too far. It's gotta turn over. The way I would look at shorting, because I, like you, favored shorting for some reason. And I think that reason was the idea of gravity. Like, gravitational forces were favoring shorts because it would push it down and make it go further than it would if you were going long. I don't know how that makes any sense. If anybody is listening to this on YouTube and you actually thought the same thing at one point, put it down below so I don't feel like such an idiot. But I guess I favored shorting for that reason because I knew I was trading Forex, and it's not like, too many people put too much money into the euro. Euro can, it can go forever if it wants to. But just by pure aesthetics, I favored shorting for that reason. Is that absurd at all? Like, what's going on?
It's not absurd at all. It's literally your personality. It's my personality. So for those of you out there who can join together in our contrarian group, which is crazy, that's what we should do. We should form a group of contrarians. Wow, what a terrible idea. Bunch of trying to put a bunch of cats in the same room together. That's never going to go good. So we are not forming the Contrarian Society. But I think a lot of our listeners out there can identify if this is a major part of your personality. And there are some really negative things that it's going to bring into your trading. Now, we've already kind of hinted around some of them, but let's just get into the bullet points. As a contrarian, you are going to be constantly fighting trends. You're going to be constantly finding yourself on the wrong side of trends because you don't buy into it. Now, we have a saying at Maverick, which is you always want to trade with the wind at your back. Whenever you make a trade, you have no idea what's going to happen. But if you have the wind at your back, it's going to push most trades along a certain way. Not all trades, but most. If you're trading against the wind, you are automatically starting out in a deficit where your trade has to do better than the wind that's going against you. So again, if we're in a big uptrend, the economy is expanding, and again, the dollar is going higher, you can fight that. As a contrarian, you can fight it, but you have to be really good on timing. You have to be really good on everything. If you just get on the other side and let the wind push you, it's a much, much easier trade. So contrarians are going to fight trends all the time. Contrarians are then going to doubt the moves that happen. So let's take a stock that went from 50 up to 80. A contrarian is going to look at that and say, it can't go any higher. What went up must come down. And what you said earlier, Patrick, about the whole idea of velocity and gravity, I will be your first commenter. That's literally what I said to people. That's literally the words I use of why I like shorting better. So even if you are proven that, hey, this is where this trade is going, if it's gone up too much, as a contrarian, you can't take that trade, because if you take that trade and it does roll over, you are one of the idiots that you didn't want to be. For the first couple of years, I really struggled with buying these kind of trades. So if I had two trades I was looking at, one a month ago was at 50 and ran to 80, and the other was at 50 and ran to 30, I always picked the one that went to 30, because that one I could be smart on. That one I could go against the trend. And the one at 80, these were all the idiots were. Guess which trade always worked better, Patrick?
The 50 to 80, of course, and I know why you avoided it. It's I think we alluded to it last week or 2 weeks ago. It's greater fool theory, which is the idea that this thing can keep going up as long as there's somebody dumber than you buying at higher prices. And as contrarians, that's the last thing we want to see ourselves as, and so we're constantly fighting that.
No, you're exactly right. And so it took me a long time. Once I finally recognized this about my personality, it was a good 2 years until I could go long without feeling like the rug was going to be pulled out from under my feet. That's what I always felt like when I went long in something in the stock market, was that the end was here. The end was near, that the trend was over, that the economy was going to go into recession, and that another terrorist attack was going to happen. I always worried about the rug being pulled out from under my feet. But when I was short, I slept like a baby. I slept like a baby because it was so comfortable for me. It took me a long time to work through that psychologically to where I could go long and feel the exact same way as when I was short. It all comes down to psychology and trading. So if that's one of your issues, it takes a lot of work, and you're not going to fix it overnight. I mean, you as a contrarian, you've been a contrarian your whole life. You're not going to fix this overnight, but be self-aware and start working out on it, because it's going to be really hard to be a successful trader if you're always fighting trades and trends.
So you gave a really good example when it comes to equities. And I can see this happening to people who trade things like equities and like metals, for example. Indices overall is a good one. But when it comes to actual Forex, where the mechanics work different, do you have any good examples there for the listeners?
Yeah, absolutely. And, Forex is a different animal in the fact that all these other markets, they do have a long-term uptrend in place. Two things are making that guaranteed. The first one is population growth, and the second one is inflation. So as long as the world keeps growing in population and inflation keeps happening, then the long-term price of assets is going to go higher. It just will happen. That does not work the same way in Forex. Like if you pulled up a chart on pound dollar or dollar yen, and you looked at a 70-year, well, you can't really go back 70 years, but you guys get my point. There is no long-term upward bias to these. And so a lot of the things that happens in other markets, you can't really get them in Forex. But on a short-term basis, it's the same thing. In the short-term basis, if you're looking out, a couple weeks, a couple months, it's the same thing. You will have trends. You will have these very strong trends, and contrarians will have a very difficult time jumping onto those. Like, let's take some of the trends that were really strong here, like when the euro was in collapse in 2011, 2012. That trade went way further than everyone thought it could go. And the other way, the Swiss franc, just kept going and going. All of 2011, the Swiss franc just kept going. And I had traders that were fighting it. Now, they were fighting it because they said the Swiss franc shouldn't be this strong. For some reason in their mind, they had determined that. It's really, when you're a contrarian, you really like to fight all the trends. So remember what Joe said. I don't want to be right. I just want to make some money. That should be your focus as a trader in all markets, Forex included.
Yeah, it's a good point too, because just because something is at a higher price than it was before doesn't mean it's still not cheap overall. So this is kind of transitioning a little bit more into investing. But with something like Bitcoin, Bitcoin is at around 29,000 right now. I think long term that is still very cheap. Problem is, I bought my first Bitcoin at around 8,600, and I'm averaged in probably a bit under 10,000 at this point. And so my ego is saying, well, it's that greater fool theory again. It's like, well, I don't want to be the guy who bought it at 2,900 when I was already the smart guy who bought it. I'm sorry, 29,000 when I was already the smart guy who bought it at 8,600. And even though it's cheap and I should buy more, I still wrestle with things like this. So it's certainly a thing. And my contrarian mind is what gets me into a lot of these things early to begin with. And now all of a sudden I have to be the opposite of that. That's tough. I know what the right answer is, but I'm still, every cell in my body is fighting it.
That is such a good story to really encapsulate what this episode is about. Because you right now, again, remember why we're contrarians. We want to feel smart. You having a cost basis on Bitcoin at that price, that makes you feel smart. It makes you feel smug. If you were to buy more at 29,000 and raise that cost basis up, all of a sudden, let's say your cost basis goes up to 15,000 and then Bitcoin has a big crash down to 15,000. You know how badly you will feel about yourself? You will feel like you are the dumbest person in the world. And so because of your current position and how it makes you feel, you aren't going to act because you don't want to lose that ego. That this is a perfect example of how these things mess with our trading all the time.
And magnify this by 1,000, because on my Contrarian Investing podcast, I decided to be public about the moves I make. So now everybody who has chosen to follow me and listen to a lot of the things I say is going to see me make such a silly mistake if something like that were to happen. And and that egg on your face doesn't just wash off overnight.
No, as a contrarian, you will carry that into the next time and make sure that you don't make that mistake again. And it will just compound the problem whatsoever. So we've talked a lot about the negatives of being a contrarian in trading. But look, there are some positives. So let's talk about the positives. Yes, you sat on the sidelines in the dot-com bubble. You sat on the sidelines in the oil boom in 2007. You sat on the sidelines of Bitcoin when it ran up. You sat on the sidelines in 2021 when all the tech stocks went crazy. You did. You missed those, but guess what? You also didn't get crushed when they fell. So look, positive thing about contrarians is they don't buy into bubbles. They don't buy into these things that end up losing 70, 80% of their value because they never believed in them in the first place. Now look, that may not sound like a positive, but it actually is. When you're taking a look at long-term money management, long-term asset allocation success, contrarians are never buying into the hot things. And so when they inevitably crash, they don't get hurt by it. That is a positive. Another positive of contrarians is they don't act spontaneously. They hate spontaneous action. They will not do it. Everything they do is very, very thoughtful. Whenever I'm watching CNBC and they bring on people that are bullish markets, they seem like the dumbest people in the world. Like the people that are always bullish, I look at them, I'm like, you're dumb. You're dumb. One of the jokes we have at Maverick is when we don't know what's going to happen, this is what you say. Well, short term I'm cautious, but long term I'm bullish. We say that as a joke because we have these people on CNBC that have been in the market for 30 years. They've got all these degrees. They've got all these things. And when they get put onto the spot, what do you think about the market here? They say, short-term, cautious, long-term, bullish. And I'm like, you get a paycheck for this? That is so dumb. So we always just have it as a joke now at Maverick. Oh, short-term, cautious, long-term, bullish.
Well, by saying that, you kind of win either way, right? Like if all of a sudden rockets the very next day, you still look good because you said you're bullish long term. And by saying you're cautious short term, that doesn't mean you think it's going to go one way or another. That just means you're not, blindly jumping into something. So it's a really good blanket statement to sound smart either way.
It is the biggest chicken shit answer that you will ever hear. And like I said, these are people that are experts in their field, that are on CNBC, that have done all this research, and they're chicken shit. But then you get on a bear. You get someone like Kyle Bass on or Jeffrey Gundlach, and they start to talk. Oh my gosh. They sound so intelligent. They've got all the reasons. And when I listen to the bears, the contrarians, I'm always like, these guys are geniuses. These guys have done so much work. And then I look at the bulls, and they're the biggest idiots. All they do is cheerleader. I always gravitate towards the bears. So look, contrarians always do more research. That isn't always good in trading, but they always do more research. So look, contrarians, there's a lot of positive things that you can still do. They do help out. But in the end, the shorter the term the trading, the more you want to be with the herd. That is just a fact. Remember, you don't want to be right. You just want to make some money.
And that makes all the sense in the world for trading. But we'd still be remiss if we didn't spend at least a couple minutes towards the end here on investing, because that's a big part of what I do. And it's funny, too. I want to go backwards a little bit before we go forwards. You have something written on the outline here that I don't think we really touched on. But for all of you out there who are contrarians when it comes to trading and when it comes to investing, there's probably a reason for that. We touched on it a little bit early. But there's three things you have listed here, three character traits that all contrarians probably have. One, you're independent. Two, you think you're smarter than everybody else. And then by proxy, three, you're elitist. So for me, Rob, check, check, and check. I think you can probably attest to that too. And when it comes to investing, the last thing we want is to fall into that greater fool theory so much that we all of a sudden jump on the AI boom now. We jump on the NASDAQ now. How absurd would that be when it's clear that the signs have been pointing downward for the last 3 years. Now, we missed out on a lot of alpha in those 3 years being this way, but we still think we're right. We still know the rapture's coming, but the problem is it just hasn't yet, and so now we don't feel as smart as we should. Now, so what do we do about this?
That is just an awesome question and an awesome segue, because what I just said earlier is the shorter term you get in what you do with your money, the more you want to be with the herd. So let's look at this on a spectrum. So imagine on a spectrum, if you were looking at being in a trade for 5 minutes, what do you care about the fundamentals? What do you care about what the name of the CEO is? What do you care about what the central bank is doing? It's so meaningless. All you're trying to do is hop on the train going the right direction. Once you start to get longer out in time frames, so now let's say you're looking to be in a trade for 3 months, all of a sudden, being part of the herd isn't as important. And then there's going to be a point where being part of the herd is detrimental. And so this is where, as a human being, it's very difficult to be a trend follower short term and a contrarian long term. And it's going to be very difficult for some of you to get your brain there. But when it comes to investing, contrarianism, I don't want to say all the time, but a lot of the time is going to be the right way to do it. And I am constantly doing this in my investing. Whenever an asset class falls out of favor, and let me just give you one example. Gold fell out of favor in 2011 and got down into the 1,000, 1,100 area. I was looking at all the assets that were recovering from the financial panic, but the two that were really out of favor at the time were metals and real estate. Now, they were unappealing to invest in. Now, as a contrarian, I noticed that and I said, hey, look, these things aren't going away. And I had some extra money because I did well in the crash of 2008. And so I said, where can I put money today that looks like dog shit? However, I have the ability to hold it for years. Which asset classes are out of favor? So, bought gold, bought silver, bought real estate, and they didn't go anywhere for a couple of years. And if you asked me at the time, how do you feel about those right now? I couldn't give you a great answer how great I felt. But how great do you think I feel about those investments now? So contrarianism is absolutely a beautiful benefit when it comes to investing.
And you just have to understand what's going to happen, too. You are always going to be too early. How many years too early, we don't know, yet to be seen. So that's the great part about trading, is you can have your cake and eat it too here. I can prepare myself for financial collapse, but by trading indices with my algorithm, I can still long the NASDAQ. It doesn't have to be binary. That's why I always encourage everybody, if you're trading Forex, trade other markets too. If you're just a trader, start investing too. It just makes sense, because none of us are ever going to hit the bullseye in any of these things. We're going to be too early. There's always going to be something that's holding us back. But again, you can still make money all the time. So I just want to close with that, because there are some real pratfalls to being contrarian, especially this long wait when you're watching all these dumb people on TV make a lot of money because they're bullish, and you're sitting here, with your arms crossed, pouting, saying, no, this is not right. This is not how it should be. It can be whatever you want it to be. Just open your mind up a little bit.
And I want to close with what I said in the last episode. The thing that I am the most proud about in my own personal life about my trading is that I no longer trade my opinion. I can have a very strong opinion. I can have a very strong opinion that the Fed has printed too much money, that the US dollar is going to lose its value. Guess what? I'm long dollar. I can be long dollar and still have that opinion. So I can still be a contrarian, but it absolutely cannot get into my trading. That's what I want to leave you with, is that you do not want to trade your opinion. Trade the charts, and you can sit down with your buddies and talk about how all the ways the market is wrong at the moment. The whole time, you're on the long side making money.
Yep, same thing. Huge dollar bull here, believe it or not. But I have gone short the dollar many times in the past few years, and it's generally done me pretty well. It's that juxtaposition. It's a little tough to get over, but you just have to understand trading short term. Anything can happen. You can be right both ways. Rob, anything you want to wrap it up with here?
Nope, that's it for me.
Okay, well then I'd like to thank everybody for joining us here in episode 38 of the Trading Psychology Podcast. Almost said 10-minute Contrarian podcast, but thank you for listening this week. And Rob and I will see you next week.
Bye, everybody.